Forcing appreciation. I'm Tim Diesel, commercial real estate consultant, and today I want to talk about forcing appreciation. That's really the reason you should be involved in commercial real estate. And you should actually be involved in just about different aspects of it. But let's talk about forcing appreciation today. And what I'll do, I just want to point out, I am getting a lot of questions on businesses, and I'll try to give you guys a little preview into the way I buy businesses and some of the things I do with them. And it might be a little bit more specific, but I don't want to lose people on this channel, but I'll definitely try to get a way to answer those questions for you. So I do appreciate those, and I recognize those are coming in. Now, when it comes to any kind of property you're buying, right? And it could be anything. It could be an apartment, an office, retail, warehouse, whatever it is. Let's talk about forcing appreciation for a minute, because I think the concept is slipping. Everyone now is looking for cap rates. And when I say everyone, I mean the majority, not every single person. Everyone's looking at what's the cap rate, what's this? And I know that because I get that question a lot. So I've mentioned before, don't focus on the cap rate so much. It really should be irrelevant depending on what you're trying to do. Now, if you're trying to buy a Taco Bell with a 15-year lease, that's very important, right? Because you've got 15 years where you can't force appreciation at all. As a matter of fact, for the longevity of that property, forcing appreciation is pretty much gone. It's not even a concept. You can't even do anything with it because you can't change the rent around. Even if everything's going up all around you, you can't do anything because they have a long-term contract. Now, if it goes down, that's also a good thing for you because you can't lose a whole lot because you're in a contract. The only thing you can do really is change that cap rate just a little bit for the investor as a perk, as a bonus. So if they're ever buying your property. Now, here's the challenge with this. If you're keeping that property from day one and you want to keep it till, 12 or 13 years in, that's not very attractive to the next guy. Unfortunately, you need to sell that building with a lot of life left on it because nobody wants to guess if Taco Bell is staying or going in 2 or 3 years, right? It's not a very good deal. So that's kind of your challenge. So you can enjoy the cash flow for a little bit, then you have to turn it over to somebody else. If you're giving somebody else 10 years on that deal, they're very interested in it. Again, not a whole lot of room to force appreciation. The most you can do is move cap rates around just a little bit and help the return of that property, right? I haven't seen a whole lot you can do with that. Now, if you're buying an empty building, and let's say it's a retail building and it's empty, it gives you a lot of room to move around there because empty buildings are not as valuable to investors, right? Now, if it is an apartment building and you have the chance to raise everybody's rent, that's forcing appreciation, right? You're increasing the income, you're reducing expenses, you're forcing appreciation. Now, if you compare that to a single family home, you can never really force appreciation. You have to wait till everybody else in the neighborhood is selling at a certain price. So if they're selling at 200, 300, 400,000, that's gradually how your property is going up. Now, if you have 2 apartment buildings right next to each other, and these guys are all charging $1,000 for this 100 unit, and you're charging $1,200 for this 100 unit apartment building, yours is going to go up a lot faster. Why? Because you're forcing the appreciation. Appreciation is really how you make money in real estate. Cash flow is not that attractive once you've been doing this for a while. Appreciation is really where it's at. You need those big checks. You need those life-changing moves to really help you propel. So if you're getting into a deal, we always hear the term value add, right? You're going to hear value add. Everybody says it's value add, off market. You're going to hear this stuff over and over and over. Look, it doesn't matter. Can you force appreciation? If you're looking at it and you think, well, I got to dump in so much money in this, I got to do that. Okay, great. Can you force that appreciation? Can you get it up? If you can't, then that's another way to look at it. Doesn't mean it's a bad deal. It just means you look at the deal differently. So different ways maybe you could force appreciation. You could do obviously raising rents, reducing expenses, and changing your financing around. really, those are the three things. You really don't need to do a whole lot more than that. Raise rents, reduce expenses, and get better financing on the property. So hopefully that was helpful. And if you guys have more questions on it, please let me know. I'm happy to answer them. Thank you.